Welcome to Commercial Real Estate Investing with Dolf de Roos. Let's begin with a simple truth. Property isn't just a tangible asset, it's a gateway to wealth. De Roos famously said, property is not only the best investment, but also the easiest way to get rich. Think about that for a second. While stocks rise and fall or businesses burn out, real estate offers stability, structure, and opportunities to leverage other people's money. Today, we're going to explore how to apply that philosophy in commercial real estate, turning calculated moves into consistent wealth. And if you want a step-by-step guide to follow along, you can download the PDF linked below and make sure to subscribe so you don't miss the deeper lessons we'll uncover. Slide 2, Overview. Here's what we'll cover. We'll start by understanding why commercial properties are different from residential. Then we'll break down the core principles Dolf de Roos uses to find, finance, and hold properties profitably. Along the way, we'll touch on strategy, mindset, and actionable steps to grow your wealth. Finally, we'll reflect and tie it all together with practical takeaways. Notice how the structure itself mirrors a professional deal. Clear steps, measurable actions, and room for reflection. Slide 3, Why Commercial Real Estate. Commercial properties offer something residential markets often can't: long-term, business-driven stability. When you lease to a company instead of a family, you're negotiating contracts, not emotions. And contracts scale. You can hold multiple properties with confidence, knowing your tenants are financially invested in the space. Consider this. During the 2008 downturn, commercial landlords with solid leases often recovered faster than residential landlords because business tenants maintained their obligations. It's not just theory, it's real-world proof that professionalism pays. And that's the mindset we want to adopt before even signing a deal. Slide 4, Lesson 1, Treat commercial investing as a distinct game. Commercial real estate is a different ballgame. While residential investing often leans on intuition and emotional appeal, commercial deals operate on numbers, contracts, and clarity. Yields typically range from 8 to 12% net, much higher than most residential markets. To get there, educate yourself on retail, office, and industrial sectors. Assemble a reliable team, including a lawyer and financier, and practice analyzing lease agreements. Start small so you can learn without risking too much. Think of this as building your playbook. Each contract you review and each property you evaluate is another move toward mastery. Slide 5, Lesson 2, Fall in love with the deal, not the property. One common mistake investors make is falling for the building rather than the deal itself. Dolf de Roos emphasizes that a strong tenant can turn a so-so property into a cash flow machine. Imagine an anchor tenant like a major retailer signing a 10-year lease. Suddenly, the property's value jumps 20 to 30%. Look beyond paint and bricks. Focus on tenant quality, lease length, and contract protections. Negotiate renewal options and rent escalations. And remember, walk away if the numbers don't align. Emotional attachment is the silent killer of returns. Slide 6, Lesson 3, Look beyond current use. Sometimes a property's present use is just a starting point. Think creatively. A warehouse could become a mixed-use space. An old office could host retail or educational centers. Companies like Amazon have repurposed logistics hubs into data centers. Exponential value created from existing structures. Start by checking zoning laws, consulting architects for feasibility, and calculating potential ROI. Even small pilot projects can reveal hidden opportunities. Creativity in investing mirrors problem-solving in life, seeing potential where others see obstacles. Slide 7, Lesson 4, Invest countercyclically. One of the most powerful strategies in commercial real estate is buying when others hesitate. Warren Buffett calls it, be greedy when others are fearful. Market downturns aren't scary, they're opportunities. During the 2020 pandemic, savvy investors acquired distressed commercial spaces at low prices, then enjoyed strong rebounds. Keep cash reserves ready, watch vacancies and interest rates, and develop relationships with agents to find off-market deals. Patience compounds into profit. Ask yourself, when have I followed the crowd and what might have happened if I acted against it? Slide 8, Lesson 5, Buy with little or no money down. Another core principle is leveraging other people's money, or OPM. De Roos shows how bank financing or seller partnerships can allow you to acquire properties with minimal personal capital. Ethical leverage amplifies returns and accelerates growth. Begin by improving your credit, preparing clear financial statements, and exploring seller financing or partnerships. 1031 exchanges let you defer taxes while reinvesting profits. Think small equity turning into vast holdings. It's not magic, it's disciplined financial engineering. Slide 9, Lesson 6, Hold for long-term wealth. Now, once you own properties, resist the urge to sell too quickly. Long-term holding maximizes appreciation, rent growth, and tax benefits. Historical data shows commercial holdings averaging 9% annual returns over decades. Value-add improvements, refinancing, and diversification can enhance this further. Holding is patience in action. It's letting your investments compound, creating wealth that extends beyond immediate cash flow. Remember, quick flips rarely build lasting legacies. Slide 10, Lesson 7, Target motivated sellers. Great deals often come from sellers under pressure, whether financial distress, relocation, or urgent timelines. Auctions, bankruptcies, and agent networks are prime hunting grounds. Assess urgency through direct conversations and offer fast, fair closings. These scenarios require empathy and business acumen. The key is win-win negotiations. Think of it as opportunity scanning. Have you overlooked such deals before? Where might the next gem be hiding? And if this slide resonates, take a moment to comment below. What strategies would you use to identify motivated sellers in your area? Slide 11-8, Embrace abundance. Finally, adopt an abundance mindset. De Roos emphasizes that opportunities exist every week globally. Thousands of commercial transactions occur annually, and networks, knowledge, and decisive action allow investors to capitalize repeatedly. Build your deal recognition skills, secure financing in advance, and act swiftly when the right property appears. Scarcity is a mindset, abundance is a practice. Slide 12, Actionable takeaways. So what do you do now? Dedicate time to learning at least 10 hours per week, focusing on sector knowledge. Prioritize lease quality over aesthetics. Explore repurposing potential, buy during downturns, and hold long-term. Network with agents and attend auctions regularly. Analyze multiple deals weekly to sharpen instincts. Small, disciplined actions compound into meaningful wealth over time. Take a moment and reflect. Which limiting beliefs or emotional attachments have held you back from leveraging commercial opportunities? Could shifting your mindset unlock new deals or higher returns? Reflection is where learning translates into action. Consider jotting down one belief to reframe this week. Slide 14, Conclusion. Commercial real estate offers a structured, strategic path to lasting wealth. Apply one principle today, like targeting a motivated seller, and watch momentum build. As Will Rogers said, don't wait to buy real estate and wait. To make these steps actionable, grab the PDF in the description, subscribe, and hit the notification bell so you never miss insights like these. Let's start building your first commercial property strategy today.